So let's go. Let's dive right into a chart about Mexico. Obviously, Mexico is being affected with the tariffs and what's happening here. Most U.S. silver imports come from Mexico. I think does it show 80%? The last stat that I heard was about 80% is coming from Mexico. It looks like a little bit less than there, but that was the number that I had. Oh, this is from 2017. I think the numbers have gone up since then. In essence, if you look at this, we have two pretty big countries that we have a current tariff situation with that supply us with silver and gold. What are you thinking in terms of prices? Because obviously it's industrial usage that people are concerned about. Jake, what do you think this is going to do to some of the items that we use day to day? Are we going to see that this pass that cost onto consumer, or what do you think is going to happen?
Well, of course. Of course. Eventually, that's what it's going to be. And I think this conversation falls under the larger umbrella of what we talked about 2 weeks ago with there is a reshaping of the financial world occurring right now. Um, and I know you wanted to get into some other subjects, but I would like to talk about the 10-year note
Oh
and
yeah,
and inverted yield
let's
curve.
dive right into it. Yeah, I
Well,
love talking
so
about the 10.
so the silver lining in the stock market getting absolutely pummeled over the last couple weeks is we've finally seen the inverted yield curve righten itself.
Mm-hmm.
For those who don't know, that's a reference between the 2-year and 10-year Treasury notes. And when the 2-year is yielding more than the 10-year, we have an inverted yield curve. And that has predicted basically every recession we've ever had. And
And,
so
and and let's just kind of simplistically say why that is. Why is that the indicator? Like what's happening in the market that indicates a recession?
Well, it's the bond market, and the bond market's referred to as the smartest market because there's no strings being pulled. It is the market's natural tendency that drives demand and thus prices and thus yields. And so when you have that inverted yield curve, it's to put a simple reference, right? If I'm going to lend out $10 to you and you're going to hold on to it for 2 years, I expect a rate of return. If you're going to hold on to it for 10 years, I expect a higher rate of return
Sure.
because you are holding on to my, well, that's obvious, right? And that's the same way these US treasuries and bonds work. And when you see that inverted yield curve, a way of explaining it is that people look out to the future. They look out to 10 years and they don't know what they see. They don't like what they see. So you don't buy 10 years, you buy 2 year. So, the important part of this is, again, it is essentially predicted every recession we've ever had. And the
And,
unique
and,
thing,
and also, wouldn't you say that it's the equity people in equities are diving out of equities because they think that the stock market is going to have a correction, so they want to get into something for a short time. They want to be able to get
correct.
access to it, so they don't want to tie their money up for 10 years. Wouldn't that be part of the reason that the 2-year would be trending?
Absolutely.
Yeah.
Absolutely. A mass exodus from the volatility of the stock market into something that's not necessarily sexy, but stable.
Right.
Right. And especially with TradFi, traditional finance guys, um, that's that's where the money is moving to right now. And I would like to maybe next week make an argument. Maybe that should be one of our episodes is uh, bonds and treasuries versus gold. What are the
Mhm.
strengths and weaknesses of each? But the point I wanted to touch on, because I haven't seen this get nearly enough attention, is that since essentially July 2022, we have been in an inverted yield curve.
Mhm.
And it was like that for 624 days, a record, unprecedented. I mean, normally these inverted yield curves last weeks, maybe months. There's a correction, there's a recession where we take our medicine, we're on to big and better things. But in August 2024, it corrected, but only for a short time, and then we were inverted again. So we haven't had the recession yet. And one of the things that my viewpoint differs from what I'm seeing online and out in the world is I see what we're experiencing in the stock market as the inevitability of the path that was paved over the last several years. I'm
Mhm.
not surprised by this, and everyone's giving credit to the tariffs, but the fundamentals underneath our economy we were due for something like this, and I think it's just getting started. So, and that's the scary thing, and of course, why you're seeing people move into treasuries and why we're seeing that inverted yield curve now correct.
Yeah.
Now, that doesn't mean we're out of the woods just because it's corrected. It's just an interesting point of note. I think that the recession's coming. Um, One of the notes is that we have today is the drop in or the unemployment rate, right? The layoffs, excuse me. The layoffs are up nearly 250%.
Okay. So, and this, I mean, like we have to take this also and break this down because to say that U.S. layoffs surged it's 245% in February. I mean, that number alone would scare anybody about where our economy is. Now, to talk about it, obviously private jobs and layoffs are down, right? Layoffs are excuse me, up. Layoffs are up for private. Part of this is government jobs, right,
Mhm,
Jake? I mean, this is
mhm.
Doge going in and letting people. So it's both. But at the end of the day, it doesn't really matter, right? At the end of the day,
Both
it's
both are intertwined with our economy.
right,
Both are gonna affect the
correct.
stock market, and yeah, one of the interesting things I ran across recently was in Biden's last 2 years, 1 in 4 jobs went to government jobs. And, I'm an American. I don't want a stated dependence. I want independence. I want those jobs growing in the private sector. I mean,
Correct.
we're not having that conversation right now, but that's just obvious, right? We want growth with small businesses, medium sized,
Correct.
even large corporations. That's where we want to see the growth. We don't want
Absolutely.
to see this bloating in our government. And that's
Right.
what Doge is going after. And that's what we were alarming the bells on 2 weeks ago when we're talking about this major shift that's happening. These government jobs are a part of our economy.
Yeah.
And it's going to tie into housing and it's going to tie into the stock market and on and on and on. So the all of this, all roads point to precious metals.
Yeah. Yeah. And I think like when you look at unemployment and you look at um, the tariff situation, if you look at them kind of hand in hand and you go, okay, there's business owners right now that are saying, okay, I typically will import items that I need for my business, whether I get them here and manufacture here or whatever's happening with them. But now I have this 20 or 10 or 25% tariff, depending on where I'm getting it from in the country. And now you have these government workers that are available now, right? There's a lot of these government jobs that are available. So if you see that correlation happening, there will be a connect.
Mhm.
Some of these people that are working in the government are going to go, wait a minute, manufacturing is coming back. I'm gonna have to shift gears. And this is tough. But this is the truth of the matter. Is like there's a lot of desk jobs that are never coming back, that are never going, they're going by the side of AI and efficiency and blockchain, and a lot of things are happening. And so a lot of white collar sort of behind the desk jobs are going to go into the blue collar. That's what's going to have to happen.
Agreed.
And I think that's people that are smart right now are going to see that transition because there's going to be a lot of corporations that are going to need people to do work, to do actual make items here in the US because that 25% deterrent, if they do the math and they go, well, listen, I need to start making things here. I can start hiring here. There's some people available. I can start doing some work here. There's going to be some tax incentives. They're talking about lowering the corporate tax from 20 to 15, which is another incentive to hire more people. So there's going to be a correlation in a few years that will be a net positive.
I think
But
you just hit it on the head right there. And this is all what Trump was saying he wanted to do. And I
correct.
think it's going to set the foundation for several years of sustainable growth. I mean, the stock market went up over the last couple of years. I don't deem that sustainable. Again, why I'm not surprised by its recent downturn. But these manufacturing jobs and these corporations that are bringing their companies back onto our shores is a part of the overall plan, and that does not happen overnight. Infrastructure needs to be built. Deals need to be made. People need to be hired. And you being a business owner, you know that that stuff doesn't just click into place.
Yeah.
All each one of those factors are tedious. There's a reason most people don't own businesses. It's not fun all the time.
Yeah.
It can suck. And so I do think we're a few years out before the fruits of this come to fruition. And in the meantime, it's going to be a pretty ugly couple years. I mean,
Absolutely.
Goldman Sachs has already, we keep hearing of new financial institutions lowering the growth rate for the United States. And again, we're historically, you want to zoom out, if we're dealing with 3% inflation, we want 3% growth, right? That's just how the tracks are greased and everything keeps moving. Um, Obviously, inflation is nowhere near 3%. I think you and I are in accordance that I don't think we're ever going to see it again. And Goldman Sachs just lowered their projected for this year to 1.7% growth.
Hmm.
That's not good.
Yeah.
And you can keep stacking this. What has the stock market done over the last several years? Well, it's all been in the magnificent seven. That is a top heavy, tech heavy industry that is going to ride the wave of volatility, right? The Dow Jones might not be sexy, but you have those blue chip, more stable uh, companies that you're not going to have
Hmm.
those types of movement. But we haven't had any growth in those companies either. So um, the next couple of years, like I said last week, rife with volatility. Markets do not like volatility.
Nope.
Precious metal market does well in volatility.
Yeah.
So
And then one more thing, I just want to kind of finish up with the layoff situation, and just if anybody's thinking this through, in a lot of the articles are talking about, well, what are employers looking for? And the studies show 95% of employers consider skills based hiring the future of recruitment. So, in anyone that is thinking through this, any industry, any school, or anything that can teach people the skills that are going to be in demand is going to be very lucrative coming forward. People that pivot into these jobs that are needed today will be very lucrative, because at the end of the day, if an employer needs a position and there's just not enough people that can do that, they will continue to raise the amount that they will pay. So I would expect there's going to be a lot of winners here, a lot of people that work to the government that can see the writing on the wall and are going to take this under advice and say, I might have to make a change here in what I'm doing to get the most out of my future, and looking in the alternative ways, just like we talk about alternative investments. There's alternative ways to make money. All these gig jobs to kind of tide you over until things pick up at a more permanent place. But I think it is quite exciting. And people always talk to us about like bartering and gold and silver, and if we continue to be in this environment where we have these tariffs and we're bringing manufacturing here, it's almost like we're going back to the way it used to be, where people are just the money, and the money is gold and silver, or money or cash or items, is all circulating within a community.
yeah,
And really, if you think about wealth, that is the best way to create. If you can keep everything within that community, or that's a way to build tremendous wealth, and
and
also creates an opportunity for um, a lot of like an economical situation where everybody's sort of winning. That we're almost going back to bartering and trading, and a lot of these government plans that Trump has lead us into that idea that keeping everything within the U.S., within your community. And I think that if you go back 100 years, where people did that more, where they went to the local market and they went to the local tailor, they did everything in their walking distance of where they lived. As much as it seemed like some people have been poor at that time, I think in actuality, they were much richer in terms of day-to-day wealth, than they are today, actually.
correct. Correct. And I think that there's an overall theme of localization that's happening, and that starts
Correct.
with bringing jobs in. I think we're going to see that with food, especially with what's going on with RFK. Maybe we'll have a conversation on that one day. Um, but it's an overall theme that's bringing power down to the people. I mean, we're
Right.
seeing that with the education. Trump wants to get rid of the Department of Education, the federal, and put it back in the states, right? And that's what this country's about, is bringing it down to the citizen,
Correct.
empowering the individual, and tying that into gold and silver. Something that our clients that I field a lot of questions on is, well, how do I use this? And it's a perfectly reasonable question because we've used the dollar and the credit card our whole life. Most people have never used gold or silver to purchase things, but the market for it is literally everywhere. It has been used by every civilization, every documented civilization for the last 5, 6,000 years. And so I always give an example, and I have a handful of examples. And my most recent one was I just got a puppy 2 weeks ago, and
Oh,
I literally
congratulations.
paid. Thank you. And it's not. I forgot how unfun puppies are. Very much looking forward to a dog. I
I'm
thought,
sorry to hear that. Yeah.
but I paid gold for my dog. I got a golden retriever, and I paid gold for her.
Wow.
And so I
That's
had
trading or bartering right there.
that's exactly what it is. And I had to talk to the lady. I said, I had 1/10 ounce British Britannias. I travel with those. And I spoke with her husband, and he knew all about it. He just wanted to know what coins they were. And he obviously has my name and number, and he's going to go get it tested. But I paid gold for my golden retriever. And it was
Wow.
very simple. Now, I have talked with other people who look at me cross-eyed because they're just oblivious to it. But the market for precious metals and the localization of our economies and the defense it provides you, right? What happens if your bank closes its doors? What happens if
Mhm.
there's some extreme event, right? Bail in, bail out, the credit cards aren't right. We're human beings living on planet Earth. Things get messy all the time. Having precious metals protects you from a myriad of scenarios financially. And
Absolutely. Yeah.
and using it's pretty easy. So
Yeah. I agree.